Hi, I'm Max Keiser. Welcome to the Keiser Report. George Osborne, Chancellor of the Exchequer, you're the stuff of nightmares. Economically, fiscally, and literally. Yes, Georgie Porgy, you got fat on bubble and fraud pie, and now you're scaring the population half to death. Stacey.
Yes, Max, I find this an interesting headline to start as we have Obama reelected to the White House. And, you know, in America, it's very partisan, and every side claims to be terrified of the other side's president winning. But here, people know, you look at the Treasury, nobody in America is afraid of Timothy Geithner, other than a few people in our audience. So, UK Finance Minister tops British nightmares. Finance Minister George Osborne is the public figure that most often appears in British nightmares, a recent study has found. Gordon Brown is number 2, Max.
Why not nightmare at number 11 Downing Street? You know, next door to number 10 Downing Street, where the Chancellor hangs out. This could be a fantastic horror film. You could do it as a tax dodge. Right here in the UK, you make a really lousy film, have George Osborne play himself in this film, and give the people a legitimate nightmare, because I understand also that watching scary movies is a good way to lose weight. And obesity here, like elsewhere, is a problem, so you can kill 2 birds with 1 stone. Give the people an exorcism away from the Chancellor while losing weight at the same time. What a great deal.
Well, Shakila Ahmed, who is a spokeswoman for Travelodge, said suffering from nightmares that involve the Chancellor, money, and losing a job are a true reflection of how the credit crunch and the double-dip recession has affected our well-being as well as our money.
That's a budgetary chainsaw massacre. People are there eating old beans out of a can, having nightmares about George Osborne. Cameron, are you just going to sit there and let this monster devour the consciousness of your nation?
Well, they mentioned double-dip recession. Apparently, it's about to go into a triple-dip recession.
Triple, baby. Triple Georgie Porgy into the triple-dip recession, baby!
This place is going to turn into a real horror film. So people are afraid everywhere around the world. They're afraid of the politicians. They're afraid now of the Treasury departments. Here is a headline regarding this. Remarks on current developments in Europe. This is from Dr. Andreas Dombré, Max, a member of the executive board of the Deutsche Bundesbank. And again, here's the Bundesbank again coming out with a statement about this silly desire to see the German gold reserves. He says, please let me comment on the bizarre public discussion we are currently facing in Germany on the safety of our gold deposits outside Germany, a discussion which is driven by irrational fears.
It's not irrational fears. It's like leading up to the election. Romney had an 8% chance of winning. All of the intelligent polling and statisticians had Obama winning with a 90% plus chance, and yet people thought that this was an irrational position because they're unwilling to look at the blindingly obvious staring them in the face. Germany, your gold is gone. What are you going to do about it? Because you don't got it no more. Are you going to let these politicians talk their way into giving yourselves a half-baked gold position? You must act.
Well, in the first story, here's a woman from Travelodge who is able to see that her clients are having nightmares about George Osborne while staying at their motels. And she's able to see that people are suffering from nightmares because of the state of the economy and the state of our money, she says. So here's a central banker who is one of the targets. He's the next in line behind George Osborne-like people. And he's trying to say it's irrational fears, like the German population are children and babies and should, you know, be patted on the back by mommy and told that all is okay, our gold is fine. And he then goes on to say, you can be assured that we are confident that our gold is in safe hands with you. And he's actually talking to the head of the New York Federal Reserve Bank here. He's saying, we're confident it's safe with you. And then he goes, the days in which Hollywood Germans, such as Gerd Frobe, better known as Goldfinger, and East German terrorist Simon Gruber masterminded gold heists in U.S. vaults are long gone. Nobody can seriously imagine scenarios like these, which are reminiscent of a James Bond movie with Goldfinger playing the role of a U.S. Fed accounting clerk.
Well, I'll tell you something else interesting that people are starting to wake up about Germany. It was confirmed in today's editorial in the paper, is that Germany during this so-called crisis that they have remarkably benefited from here in the Eurozone is cozying up to China, Russia, Iran. I've made this prediction for a couple of years now, that Germany will align themselves with that group of countries in a bid to become the sole superpower in the United States. Unfortunately, when they come to impose themselves as the Fourth Reich, they'll be missing something very important, and that is 60% of their gold. Ha 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 ha!
Here's an image that was sent apparently to the Bundesbank in response to their claim that all their gold is safe. And this is, as you see, Ben Bernanke protecting their gold. That's in the New York Federal Reserve Bank and their pile of gold.
This is what the Germans need to go down to the central bank in New York. Geithner, come out with our gold right now, Geithner. We're surrounding the place. On gold. Von Schlicken gold. We Schlicken gold. Okay, that's what you got to do, Germany. Get real.
I think it's William Dudley that's the president of the New York Fed now.
All right, whatever.
So, headline reads, Max, about that gold stored in flood-prone Lower Manhattan. Max, this is from Business Week, and they note that a lot of buildings in Lower Manhattan were destroyed due to the flooding from Hurricane Sandy. And they ask, what about the nearly 15 million pounds of gold bricks stored at the New York Fed? Well, they say it's okay because it's in a vault which is protected by an airtight and watertight seal created by lowering a 90-ton steel cylinder just 3/8 of an inch into a 140-ton steel and concrete frame, an effect, quote, similar to pushing a cork down into a bottle.
That doesn't sound Bond-like. That doesn't sound Dr. Evil-like. No, of course not. But, Stacey, the gold is not going to be damaged by water, wind, or rain. That's one of the great things about gold. However, something else was damaged.
Yeah, well, we'll move on to that in a second, Max. But I want to say that, you know, here is a New York Federal Reserve Bank, part of the Federal Reserve Bank system. And Ben Bernanke, in testimony to Congress, said that the Federal Reserve banks and central banks around the world only hold gold as a matter of tradition. So why go through this elaborate fakakta sort of security system? It must be millions and millions and millions and billions of dollars. A 90-ton steel cylinder, 3/8 of an inch thick, with a 140-ton steel and concrete frame, if it's just tradition.
Yeah, exactly, because Bernanke is, speaking out of both sides of his mouth. He's a duplicitous, nightmarish, ghoulish idiot. But the fact is that going forward, gold is the only thing that's going to keep these economies afloat, and that's why there's a mad scramble for gold. That's why since 2009, central banks have, for the first time in 30 years, been buyers, net buyers of gold. And Stacey, I make the following prediction. When the paper apocalypse hits, you will find central banks printing money. Not to buy bonds, but to buy gold. That's when gold breaks out to $10,000 an ounce. That's when the global bond market collapses. That's when we have a new paradigm shift. That's when we're going to really see some excitement.
So here is a picture that accompanied this story. As you see, it's lots of gold from the New York Federal Reserve Bank, they say. That's 15 million pounds of gold that they say is a tradition, and yet they went through all these elaborate security measures to make sure it was safe from water. We all know gold will not dissolve in water, unless it's in the New York Federal Reserve Bank, maybe, who knows. So let's move on to another paper apocalypse that happened down in Lower Manhattan. Did Hurricane Sandy cause $36.5 trillion in damage? This is from the automaticearth.com, and they noticed that a vault in Lower Manhattan was flooded last week. It was not waterproof, and it contained $13.2 trillion worth in paper certificates, 1.3 million of it. So the vault in question, Max, belongs to Depository Trust and Clearing Corporation, or DTCC, a clearinghouse for Wall Street firms owned by Wall Street firms.
Right, and the amazing part is you mentioned 30 trillion or so in paper now washed away by the storm. That's not even 1% of the global derivatives market, number one. Number two, you've got this incredible scourge of naked short selling that has gobbled up wealth around the world. That is to say, banks counterfeiting securities in naked short sales to push the price of things like gold and silver down. The way they do it is something called failure to deliver. Now, if you've got 30 trillion of paper, which is magically missing, well, they're going to fail to deliver on that trade, isn't it? So this is going to be like Blythe Masters' greatest con ever, because as she's pummeling the price of silver with those naked short sales and counterfeiting over there at JP Morgan in London, she can just claim, well, all the paper's missing. It got washed away. And meanwhile, Germany will be looking for their gold, and the U.S. will say, no, the water dissolved your gold, but we'll give you this paper instead. Triple ha-ha.
Well, actually, as Ilargi from the automaticearth.com points out, the DTCC, again, which is owned by the Wall Street banks, which also own the New York Fed, where they spent a huge amount of money to protect some traditional gold. And they spent no money. As you see, I'll show you an image of the DTC building. You see it's huge, tall, 55 stories. Somehow the paper, 13.2 trillion of the 35 trillion apparently washed away. That paper washed away. But Ilargi points out that the DTCC has been for years trying to get all the Wall Street banks to dematerialize, i.e. not ask for the collection of the actual paper. Now, the breakdown from the Automatic Earth is about that the paper there, the 13 trillion, if you divide it into 1.3 million pieces of paper, that would have equaled about 10 million in stock value in each certificate. So, however, because of this disaster, the DTCC has said that, quote, it has suspended processing of physical certificates for an indefinite period. So they're trying to say that everybody should just collect it electronically. And trust us, we're not Bond villains.
Clearly, the cause of the flood was JP Morgan and Goldman Sachs. I mean, look at Goldman Sachs. They had like 300 sandbags ready for the event. They were all lit up. Lloyd Blankfein was at the top floor of Goldman Sachs, acting like Mr. Burns from The Simpsons, saying, oh, our naked shorts will never have to be covered. So not only did they cause 9/11, Stacey, but these banks also caused the Great Flood of 2012. Well,
that brings me to this final little thing, because you mentioned Goldman Sachs. They were the only ones that had their lights on in downtown New York.
A lot of people, of course, now realize that was Lloyd Blankfein's bald head.
Exactly. Well, that brings me to the top of the show, because we talked about the nightmares. Everybody here is having a nightmare about George Osborne. Well, for the last month, I will admit that I've been having this nightmare after reading this headline, Greg Smith, I saw Lloyd Blankfein naked. I think he was talking physically naked, not naked short.
Wow, talk about coming up short. All right, Stacey Herbert, thanks very much for being on the Keiser Report.
Thank you, Max.
All right, stay tuned for the second half. I'll be talking to that legendary troublemaker, Ned Naylor Leyland. Hi, I'm Max Keiser. Welcome back to the Keiser Report. Time now to turn to Ned Naylor Leyland of Cheviot Asset Management. Ned, welcome back to the Keiser Report.
Thank you, Max. Nice to be here.
Ned, we got to ask you about Germany. The biggest story the past few months, German gold. The Bundesbank calls the story bizarre, absurd, crazy. This is the story about them basically having 60% of their gold in New York. A lot of people suggest it's been sold. They're protesting vigorously against this. What's your take?
Well, it's a great story, in as much as I think, you know, those of us who are on this side of the fence have been watching it for a long time, repatriation of gold reserves. I think the way that I see it, more than anything, is in the context of history, which is that clearly central banks didn't post their reserves to New York or London in the past for the same reason that they're there now. In other words, the world was a very different place pre-World War II and post-World War II, and then once the Nixon closed the gold window, we entered a different world, and of course the relationship of the central bank custody of gold reserve changed significantly at that point. And Max, the way I see it is using the lobster pot analogy. Now, you, having invested yourself, will know the lobster pot analogy being you don't want to be getting invested in things where it's easy to get in and difficult to get out. And I see central bank foreign custody of gold reserves as a golden lobster pot. It's the sort of ultimate worst case lobster pot investment, whereby they went in with the gold, and it's only now they've looked around and gone, wait a minute, how do we get out? And I just think, you know, when you think about lobster pot investments, generally it's the most illiquid and smallest thing that you tend to invest in, but here it's the exact opposite, and it's the sort of ultimate great big golden lobster pot.
For the American listeners, that would be the Roach Motel investment, where you check in, but you don't check out. Sure. Now, since 2009, or going back before 2007, before the crisis hit, really, and then it blew up in 2008, attitude towards gold by central banks was that it's a relic of the past, a barbaric relic of the past, to quote Keynes. And they really were anti-gold. They were selling gold. Then the crisis hit. Then in 2009, they started to become net buyers of gold. Now they're repatriating gold. Central banks like Mexico, their gold position's up 2,000%. Korea's gold position up enormously. 500 tons of gold bought by central banks in the first half of this year. Another 500 to 600 tons bought in the second half. This seems to go completely against this notion put forward by Ben Bernanke that gold is just a trinket, people collect it, doesn't really matter.
Well, yeah, look at what I do, not what I say. Is the answer to that. Absolutely. And in fact, actually, you can make the argument that central banks now have a double bid in the market because they're bidding for themselves and they're also bidding to buy physical in order to deliver it for these repatriation requests. Because, of course, you've got to realise that they're not able to unwind the chain of leasing and swapping in order to deliver bars that are within the custodial systems.
Okay, you mentioned leasing there for a second. A lot of people speculating that Germany's gold has been leased out into the market. Vis-a-vis the bullion banks.
Yeah.
This is a trick that central banks and bankers use to feather the nest of investment banks. They telegraph to the market that they're going to change the lease rates to borrow, to sell gold, knowing that the price will fall and that these banks can scalp a few bucks from the market on the lower price using a short sale. Are we now in a position where perhaps all this monkeying around with leasing, et cetera, where will Germany ever see its gold? That's the question. Or is it gone?
I think it's likely to see some gold. If it's going to repatriate in 50-ton chunks, which is what we're talking about, I think it's likely to see gold. Whether it's theirs or was or where it comes from, I think is a slightly different point. But yeah, sure. I mean, the investment banks have been involved. The LBMA system, as we've discussed before, is effectively a highly leveraged, unallocated system. And really, the way I see it is the central banks have sort of followed in with that whole concept of leverage, which is why they've also been involved aggressively in leasing and swapping. And as I'm sure you're aware, they account for it as gold and gold receivables, meaning that it is one great big pot of gold trading as opposed to actual physical relocation of gold bars.
Okay, let's go back to the Bundesbank for a second here. Now, they recently did admit that they repatriated over 900 tons of gold from London between 2000 and 2009. Do you think Gordon Brown's mad discount sale of UK gold back in the day when he sold 300 tons at the historic low brown bottom of $250 an ounce scared them? In other words, scared the Germans into repatriating gold. What was going on at that time?
Well, I mean, ultimately, what we know is what we don't know, because of the fact the whole thing is completely opaque. So the fact that central banks don't give us any information about gold reserves, or really very, very little, is what leads us to speculate as to what might or might not have taken place. And what I would say is very interesting, this point about repatriation of London-based reserves, because I know myself that back in, I think it was 2003, I met with Rob McEwen, who's the ex-chairman or CEO of Goldcorp in the US.
Not the second-rate poet popular in the 1960s?
No. And at that point, Goldcorp, much against the trend, were actually holding physical gold as cash, which was very contrary at the time, hence why I was interested and I met with him and spoke with him. And I asked him whether or not he had a view on the UK selling its gold reserves, and he said yes, he was very interested by this, and in fact he had got involved in the auction process because Goldcorp were in the market for decent amounts of physical to add to their treasury, and that he'd actually bid for some of that gold during the auction process, and despite the fact he'd put, let's say, a very generous bid in, he didn't get allocated anything, which he was somewhat surprised by. So if we take that speculation a little further and use that as the base case, it would appear that potentially the leasing and swapping custodial chain of problems was already there back then, and when the Bundesbank asked for their gold back from London, potentially London were in a situation, well, where do we find the physical to deliver against this? Now, okay, well, we are in a world of speculating what may or may not have happened, but there are a lot of moving parts, and it's a very interesting story, and I expect more to come out of it as more people become interested in it.
Right, you mentioned the chain of ownership and all of the Byzantine relationships that go on between hypothecation, rehypothecation, leasing. In the first half of the show today, Ned, we talked about $13 trillion of stock certificates washing away in Hurricane Sandy. Now, according to Automatic Earth, the very popular website, it will cost more than $200 billion to replace those certificates. That seems like a lowball figure, first of all, and let's say Germany, in fact, had to go into the open market and replace that gold. We're talking about quite a sum of money, yes?
Well, yes, but I mean, they wouldn't have to go out and do it, obviously. It wouldn't be them. It would be the New York Fed or Paris or wherever. It would be the ones that be doing the buying on their behalf, because clearly they have the chip. Where's my gold? You better go find it. I mean, what's also fun and potentially slightly amusing about it is the fact that Hugo Chavez led the way with this movement by recognising some of the structural issues with the global economy and actually moving against it. And I think, he probably needs to be given a little bit of credit for making the subject a bit more broadly understood. And I think one thing I will say, Max, is it's very interesting because the Germans are unlikely to let this go now. I feel like, dog with bone. And one would hope that the story will be pushed forward by the Germans. And despite the language from the Bundesbank, which was pretty bizarre, they use the word bizarre and crazy and all this sort of language, which to me suggests they're a bit nervous.
Well, we're not going to let go of it.
No.
We were there, and they told us in person, face to face, that the gold was not there. It was in New York, and that was a revelation. And now they're trying to downplay it as if, well, of course it's in New York, but it's safe, which is not safe at all. Now, finally, Ned, let's talk about your correspondence with Bart Chilton of the CFTC regarding his alleged investigation into silver price manipulation. The FT ran a front-page piece saying the investigation would be dropped. Bart denied this. For the silver enthusiasts out there in the audience, the Silver Liberation Army.
Sure.
Ned, you're one of the generals of the SLA. What's happening?
Well, I've had ongoing correspondence with Mr. Chilton. I mean, one thing I'll say about him is he is quick to respond to questions, which is to his credit.
Or is he just in marketing? In other words, my experience with Bart, going back a few years, is that he's on the marketing side of the business. He doesn't actually know what's going on.
Well, I would potentially agree with you on that one. But I would just say that, to give him some credit, he does respond. You're not sending emails into a black bin that never get replied to. There is an attempt to deal with...
No, it's a blonde bin.
Maybe.
Hi, I'm Bart Chilton. I do marketing for the CFTC.
But look, I think, Max, in the background, there are things going on, and I think a lot more evidence has been compiled behind the original investigation that took place nearly 3 years ago now. And I think, that there's no doubt that the CFTC is in a serious corner. The fact they came out straight after that FT article and denied it and said that's not right suggests they have to be sitting on some fairly substantial evidence. Otherwise, they wouldn't be so quick to jump back and go, no, it's not being dropped. So to me, it's just a function of how long it takes them to actually speak, or whether or not some of the evidence comes out in the public before they choose to speak up.
Okay, so it's been going on for 3 years. Let me ask you, Ned, what was the total silver production from all the miners approximately last year?
I think it was sort of 750 million ounces, something like that.
Okay. At one point, I think it was last week or the week before, in one single day, from one single bank, how much silver suddenly showed up on the marketplace, smashing the price down to a couple of...
Well, I think the number that was banded around was sort of 200 million ounces or thereabouts in a short time frame. I mean, this is not the first time we've seen it, though, of course. This is an unacceptable degree of depressant versus the available physical. I think we accept that.
Right. Now, the Apple computer has roughly 1 billion shares of stock.
Yeah.
Okay, so what would happen if somebody showed up with $250 million, 250 million, 300 million shares of Apple to sell at the market? What would happen to Apple's price stock?
Well, obviously it would crash. I think the two things are there are differences. One is
one is that there's a chain of ownership for Apple stock, but there's no chain of ownership for the futures contracts that Bart Chilton is overseeing at the CFTC through naked short sales vis-a-vis JP Morgan and Blythe Masters to smash the price of that silver only for the effect of supporting the dollar and creating mayhem in the markets. That's the difference.
Accepted. There is an enormous amount of truth in that. However, there are sort of some differences between Apple and
well, truth is truth. There's no gradation of truth. You can't say it's an enormous amount of truth. It's black and white. They're committing fraud. That's the fact. Now, who's going to stop them? Bart Chilton, the blonde non-regulator who gives great lip service but does nothing. Gary Gensler, the former Goldman Sachs guy who sits around, says nothing, but paid a lot of money, and who knows what else he's involved with. What's it going to take? What's it going to take to restore honesty in that market?
The answer is the market will do it, Max. It won't come from the regulators. I think it's pretty clear now that we would have had that from the regulators by now if we were going to get it from them. So I think we can say with confidence we're not going to get a big announcement of conviction from the CFTC soon. However, what I do think is that sufficient information is made public for instance, hedge funds to have a look at, then I think that they're going to jump. They're going to move the price themselves, and that's how it will come about. That's my view. personally think I've always actually said that. I think it won't be, I think it will come through people, investors waking up and wanting to be in, and that will move the price rather than a regulatory decision.
What's the hedge fund's current position in silver and gold? Are they net long? Are they building? Are they flat?
Well, I think they've changed overnight, because I think that now that we're bathed in hope and more of the same, that they're going to be more willing to play the reflationary trade.
Right, I could go into that just briefly. We have about 30 seconds. Obama's been reelected. Ben Bernanke stays in place. More of the same. And that effect on gold and silver is?
Well, it should be very beneficial, because usually second-term presidents spend a lot of money in the first year and a half as they try to put their programs through. So I think that's why the market has that perspective on it.
All right, fair enough. Ned Naylor Leyland of Cheviot Asset Management, thanks so much for being on the Keiser Report.
My pleasure, Max.
That's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacey Herbert. I want to thank my guest, Ned Naylor Leyland. If you want to send me an email, please do so at kaiserreport@rttv.ru. And don't forget to follow me on Twitter. Until next time, bye, y'all.